The meeting of the Federal Reserve is underway, and policymakers are considering the latest economic data, which was not so great, really. Retail sales a bit disappointing. John Silvia, chief economist of Wells Fargo, joins me. John, when you look at the data today, put it into context about what the Fed has on its plate during this meeting, clearly worrying about the health of the consumer has got to be a concern.
Oh yeah, the data, as you said, it was not that great to justify the Fed raising the federal funds rate at this meeting. The economy still looks like maybe 2% economic growth in the first quarter after a really weak 1% in the fourth quarter. The job numbers look pretty good. Consumers doing sort of okay. But these aren't the kind of numbers that would justify the Fed moving the federal funds rate at this time.
Why do you think the Fed has placed so much emphasis on what we're seeing in the labor market and less so what's happening on the inflation side, which has really kind of confounded a lot of people?
Well, I think from the Fed's point of view, movements in the labor market would lead changes in inflation. And in fact, as probably you realize, as well as most of the listeners, that hasn't happened. We've got better employment numbers, we've got a lower unemployment rate, but it hasn't translated into higher inflation. So once again, I think when the Fed's looking at the inflation data, it isn't really a problem. And so once again, I don't see there's a justification there for the Fed to move at all this week.
Is there any risk in waiting?
I think from the Fed's point of view, and certainly from my point of view, no. There's no risk in waiting. If the inflation is the big issue in the mind of the Fed, inflation just doesn't justify the Fed moving. So let's just wait another 3 months, see what happens in June, see what we get by June. But even in our view, we're not going to have 2% inflation by the end of this year. So it may even be beyond June that we wait for the first Fed move this year.
John, do you think the Fed at least would be a little bit more comforted by what's happened into the markets? Because the last meeting, this was an issue that was raised by the Fed, some of the volatility we've seen.
Yeah, I think the improvement in the equities in recent weeks, the diminishing volatility that we've seen, and I think, quite frankly, a little bit more stabilization on the global scene has given the Fed a little bit of comfort that wait and see where the inflation numbers go, and then maybe we can act a little bit later. But there's no hurry for the Fed to move at this point.
What changes would you expect in that statement once it's released?
Well, certainly, as you hinted at earlier, I'd expect the Fed to say, hey, the labor market's doing much better, much more solid job gains than perhaps what people had expected. Continue to see stabilization in the global scene in terms of the overall outlook for the economy. And finally, not much inflation.
John Silvia, chief economist of Wells Fargo, thanks so much for your time.
Thank you, Rhonda.
I'm Rhonda Schaffler for The Street.